Thanks for clicking! The London and St. Thomas Association of Realtors, LSTAR, has released London's real estate data for the month of October, showing a real estate market that remains relatively stagnant. Or, as the London Free Press puts it, realtors optimistic about rising sales.
It's started.
Indeed, in the failure of London's real estate market to reignite even following 125 basis points worth of rate cuts, is going to come as no surprise to October London Free Press, which expressed the doubt that the market would come alive on those rate cuts. It will come as a surprise to June Free Press that said the market was just waiting for cuts and that even a minuscule cut could spur buyers to jump back in, but not a surprise to the October Free Press.
I just want the old you back.
Regardless, though buyers aren't buying in any significant numbers, and as we'll see, sales are still far below London's 10-year average for the month of October, we are seeing some minor movements that we really shouldn't be seeing in October. So what I want to do today is go over London's real estate data for the month of October, take a look at some of the abnormalities occurring in the market, discuss the Free Press's recent assessment of this local market, and then go over some implications. As we'll see today, the future of the London market remains relatively uncertain, though we will continue to track that market on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, and that price was down in October. In September, the benchmark was $611,500, and that dropped about $3,000 down to $608,500. So the benchmark price down $3,000 since September, but still up $16,000 from this point in time last year. And the average price fell as well, sitting at $621,000 in September, and as of October, sitting at $615,900. So the average price down about $5,000 since last month, but still up about $7,000 since last year.
This is your last chance.
With that said, the median price did rise last month. The median price, that's where half as many homes that are sold over that price and half as many are sold under that price. September's median price was $585,000, and that jumped $5,000 to $590,000 in October. So, median price up about $5,000 since last month, and similar to the average, up about $7,000 since this point in time in 2023. In the sales to list price ratio, the SLPR was up as well. The SLPR, if you'll remember, that measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $98,000, the SLPR would be 98. London's SLPR in September was 98, and that bumped just a bit to 98.1 in October. So, on average, homes are selling for 1.9% under asking price.
Worth every penny, bro.
And finally, the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale. London's MOI in September was 4.7, and that dropped down to 4.1 in October. So we have a bit less inventory sitting on the market than we did the previous month, and we're going to discuss that in a few minutes. So, in summary, the benchmark price down $3,000, the average price down about $5,000, the median price up about $5,000, homes still selling for under asking, and relatively less inventory sitting on the market. And the decrease in the relative inventory comes amid rising sales numbers, with sales coming in at 443 compared to the previous month's 400, a 10% increase.
You were warned.
And that's actually a pretty good increase in the number of sales for October. Usually in October we see sales up by about 5% from September, looking at that 10-year average, but this month we saw a 10% increase. So sales did in fact increase more than they should have in October. With that said, aggregate sales numbers, the total amount of sales for October, was much lower than it should have been, with the 10-year average sitting at 523 compared with the 443 that we saw last month. So yes, sales are up from September. Sales are usually up from September. They are up a bit more than they should be, about 5% more than one would expect. However, they are up from a very low number. Sales are still nowhere near back to normal. With that said, we're also seeing some abnormalities for the new listings data as well, with new listings coming in at 951, much higher than their 10-year average of 746. Further, while new listings are down about 10% from September, London usually sees a drop off in new listings in October. New listings were down by about 10%, a little bit better than the 12% drop in new listings that we usually see over the past 10 years. So, sales are up. The increase in sales is higher than it should be for the month of October in London, but still, the aggregate number of sales for October is far, far below the 10-year average. We're seeing some movement because of the rate cut, but not very much. Tangential at best. Very similar for the new listings data. New listings are down, not as much as they should be for the month of October, and we still have a lot more listings coming to the market than we would have expected to see judging from the past 10 years. Now, regarding the listings data, I know we're hearing from the usual suspects that would-be sellers are getting ahead of the market, getting their properties listed on the market in anticipation of buyers' return, but I'm not sure the extent to which that makes any sense.
Doesn't matter.
Well, if buyers and sellers have the same information, and the spring market is expected to be bedlam, as we're being screamed at by the usual suspects on TikTok, then why wouldn't sellers wait this out until buyers return, which even the Free Press says won't happen until after the new year? And, for its part, the London Free Press had an interesting idea as to why buyers aren't flooding back in, noting that because prices are still so high, it just doesn't make any sense for many to jump back into the market. Which makes sense to everyone that's not in the real estate industry. The average price of a home in London has more than doubled over the past 10 years, while the median household income has only risen from $62,000 in 2015 to $79,500 in 2021, a 25% increase, but nowhere near doubling.
Doesn't matter.
And of course, I'm sure it's not just prices keeping Londoners out of the market. It's probably interest rates too. Even with the Bank of Canada having cut now by 125 basis points, fixed rates aren't exactly following one-to-one. Fixed rates remain high, which, of course, as we've talked about so many times on this channel, that's because the Bank of Canada does not set fixed rates. Those are influenced by the bond market, which is largely influenced by events unfolding in the United States. And we can see this very briefly looking at fixed rates. If we go back using the Wayback Machine to May of this year, a decent 5-year fix from RBC was 4.84. Fast forward to now, 125 basis points worth of rate cuts coming from the Bank of Canada, and a decent 5-year rate from RBC is 4.44. Only a difference of 40 basis points, despite 125 basis points worth of cuts coming from the Bank of Canada. As such, while it looks as though rates are coming down because the Bank of Canada is cutting rates, the evidence, the facts, the numbers say otherwise.
Who gives a
As such, prices still remain fairly high, interest rates still remain relatively high, and although we are seeing a minor uptick in buyers returning to the London market, it's nowhere near what we would normally expect to be seeing in October, let alone what's been predicted by the usual suspects for the past year and a half. With that said, whether or not London's market will pick back up for the month of November remains to be seen, but we will obviously continue to track that market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.